Let's talk about this stock market sell-off today. And boy, it was a doozy. Now, there's a lot of people out there that'll tell you, oh, the stock market's crashing. The worst is yet to come. Don't get into that kind of hype. That's what leads you into panic selling. That's when it leads you into letting your emotions take over your trading rather than what the charts are telling you. So in this video, what I'm going to do is I'm going to stay away from the alarm bells, and I'm going to provide you with the technical analysis that you can use going into Monday of next week, and just to be able to understand what we're facing with and what today's price action means for the market as a whole. Now, first off, one of the things that I think is very peculiar of late are these Friday sell-offs. You had obviously the huge one today. That was a big old candle. You had this one back earlier this month. You had another one in late January. Draw that one a little bit better. And then you also had another one before that. And it's like these consistent sell-offs that keep taking place. It's pretty wild. Probably what's even more incredible are these rallies that happen after them. So you have this rally right here off of the lows. Obviously, that was the DeepSeek news, but it jump-started a future rally. Yes, we didn't finish higher that day, but we finished much higher off of the lows, and then we saw it market rally later on the rest of that week until the next Friday rolled around. And we got another big rally that following Monday. And then we had another rally right up here too. So again, will we see another rally on Monday? Remains to be seen, but that did give me a little bit of a hesitancy of wanting to get long or get it short going into the week, and just knowing what the tendency has been of late to want to bounce this market. Now, the other thing that I would say is fairly interesting to me is this 50-day moving average on SPY. So you have this support right here, the 50-day. Yes, we break below it, but every time we've tested it going back to late January, we've held it. So right here was the one following the DeepSeek news. And then we had another one where we gapped way below it. Didn't look like we had a chance. That was from the tariffs. Didn't look like there was a chance of us closing above it. We did. And then we tested it back here just a couple weeks ago. And then now today, we're testing it once again. We didn't break below it. That was really where the selling stopped at today, was right here at this 50-day moving average. So we didn't see it get any worse once that was tested. It just kind of stayed there. It based a little bit into the close. Overall, strong volume. That indicates there's some definite panic selling that took place today. We haven't seen really strong volume like that in quite some time. You'd have to go back to about mid-December, last time that we saw that much volume. So there's definitely a lot more volume to it, a little bit more panic selling. But also, one of the things I would tell you is when you get these strong volume bars, it can oftentimes signal that the selling is exhausted in the short term, which can lead to some of these bounces that you see the following day, or in this case, on Monday. Now, the choppiness that we're seeing here, yes, we were down this week and down 3 out of the last 5 weeks. So really, most of the weeks of late over the past month and a half or so has been fairly bearish. You look at it from a monthly standpoint, and I think this is where you really see why there's so much frustration in this market right now, is because of how choppy it's been over the last 3 months. Now, just doing a simple eye glance at this, you wouldn't really think there's too much about it, but we're down on the month, down 2 out of the last 3 months. And during this 3-month period here, the S&P 500 has been essentially going nowhere. So if you're looking for like price expansion, like what we saw in 2024, or what we saw here in late 2023, or even early 2023, you're not getting that kind of price move. Instead, we're just flatlining. We're going sideways. Yes, we're still above the 5-month average, but it's not actually going anywhere. And so there's a lot of frustration among traders not able to really get a disattachment from that $600 mark on SPY or 6,000 on SPX. And when we get back to the all-time highs, it never seems like it wants to break through and really rapidly expand or start to rally. One of the other telltale signs that I think is concerning with this market is what we're seeing in stocks like PLTR, where it's down another 4.6% today. Heavy selling in that one. Then you also saw with HIMS today down 26%. That's a lot of selling as well. So you're seeing a lot of these big names that have caught the eye of a lot of retail momentum chasers starting to sell off. Even like with SMCI, yes, it's been on an incredible rally of late, but you're starting to see where there was some profit taking there today as well. And you didn't see that dip buying come in like you saw yesterday. Going back to SPY though, because we don't want to forget about the main thing here. One of the things that also catches my eye is that there is a long-term trend line here in place on SPY. This long-term trend line has been pretty solid going all the way back to late 2023, November 2023, October 2023. So far, we've seen it bounce each and every time. That could be a level that SPY is looking to return to, and it's not that far off. You're talking about maybe another percent and a half before it retests that rise in trend line again, like what we saw back on January 13th. That trend line is definitely in play here. Also, looking at it from a weekly standpoint, the same trend line, you can also take away from it that there's also a parallel line that goes with it as well. If you draw this a little bit tighter there, these lines line up perfectly parallel. So we're inside of this channel essentially. And we've been trading in the middle of this channel for a long time. When it kind of gets sideways in the middle of the channel, what you'll usually see is a return back to the rising channel band and to retest it at that level there. So these are levels that I would be paying close attention to. And yes, it's a little bit different on the weekly versus the daily, so keep that in mind. But there's a very good chance, or at least a better chance than not, that we see a retest of that rising trend line there. On the Qs, also, you're seeing a lot of momentum getting broken down there, a lot of that momentum fading. And once again here, you have a rising trend line that could be coming in play in the short term as early as next week. Watch that rising trend line at around I'd say about 523, less than 1% away, and watching it possibly get tested. Now, the worst of the worst was IWM. This one's seeing a significant breakdown. And you actually have a head and shoulders pattern here that confirmed today. Now, there's a lot of different ways to draw this. So I know there's some people out there that'll be like, Ryan, that is definitely not how you draw a head and shoulders pattern. And I do think that there's a lot of different takes on this one because the price action's been so sloppy. Some people will say, oh, that's the head and shoulders pattern right there. But I think that this one that I drew, though, highlights a lot of support here in the past, with the exception of one breakdown here where we quickly reclaim that support level. But over time, we have tested this level a lot, and it has held on a number of occasions. But even more important, we're closing below the 200-day moving average for the first time since 2023. We have not closed below on a daily basis below the 200-day moving average since late 2023. So that's a huge development right there, and one that should be taken serious. So this left shoulder, head, right shoulder confirmed to the downside. Pretty ugly chart, strong volume. The issue with the IWM, it's been so choppy going even back to 2024, is that there's not clean support levels underneath. One that does stick out to me is this one right here from early 2024. That could be the level that the Russell seeks out at around 206. That would be, a little more than 5% to the downside going forward. But the bigger takeaway in all of this is that not to let fear and panic or emotions drive your trading decisions going forward. That's why it's so important to have a trading plan in everything that you do as it pertains to the stock market. Knowing where you're going to get out of a stock before you ever get in, and to constantly be reevaluating your trades in light of the new market news, the new sector news, what's going on in industries, and the overall headline risk, and to reevaluate your trades each and every day, whether it's appropriate to be taking profits, whether it's appropriate to be raising your stop losses, or like what I did today, I got out of all my positions and went back to cash. Now, if the market bounces on Monday, I'm willing to play that bounce. But if the market sells off, that keeps me from having to expose myself to unnecessary risk that takes place over the weekend. If you enjoyed this video, I would encourage you to like and subscribe. And let me know down in the comments below, what was your takeaway from today's market action? Does it leave you fear and trembling for what might take place on Monday? Some people are already predicting a bloodbath on Monday. Other people think that this is an opportunity to buy the dip. Let me know your comments in the comments below. Thank you guys, and God bless.